Welcome to my presentation on unlocking financial success. I want to ask you a question before we start this wonderful presentation. Are you making money but still feel stressed out about cash? You're not alone. So many business owners feel busy, and being busy is a good thing. But if they're busy and still broke, we got a problem. With this presentation, we are going to fix that problem. My name is Ibanessa Soto. I am an accountant and business owner, certified business advisor. I use my financial background to help business owners have a growing and more profitable business. I'm successful at this precisely because I understand both sides of the business, the financial side and the business ownership side. As an accountant, I can look at a business and spot the underlying reasons why the business is not profitable and has poor cash flow. And more importantly, I know how to fix it. I know how to make businesses grow and become more profitable. That's my mission. Because if you have more clarity, along the way you have more clarity when we go over our program, then you have more cash and you will experience freedom. More freedom to do the things that you really like. Today's agenda is why most businesses fail. The 3 sources of money for every business. We'll go over the cash flow drivers, cash flow best practices, how to get back control over time and money from your business. And lastly, the 16 drivers that drive revenue, profit, and cash flow in every business, and that you need to watch like a hawk. So, why most businesses fail? The number one reason most businesses fail is not lack of talent or passion. That is always there. We start a business, we're passionate about it. That's not the problem. It's lack of money. So, what's the reason why most businesses fail? Like I said, lack of money. Every failed business would still be in business today if they were able to access the money. Because money is the company's oxygen supply. Money literally solves every problem. If you have a marketing problem, money allows you to do more marketing because you are able to invest in hire professionals in programs that can allow you to generate more leads and therefore more customers down the road. And what if you have a management problem? Well, you can get better managers. It allows you to hire people so you can manage instead of working in your business. And you can work on your business. Do you have a down market? Money allows you to weather the storm. And let's remember COVID-19. Having enough cash during that time, it would have been crucial for many, many businesses. If you have a seasonal business, like for instance, the spa business is seasonal. There are times in the year where people are more drawn to take care of themselves and beautify themselves or rejuvenate their skin. Money allows them to make it through to the next season. And if you have a sales problem too, you can improve your product or services or hire more people, salespeople or better salespeople. So after going over the importance of cash in a business, let's see what drives cash flow into the business. What drives cash flow? There are 3 drivers of cash flow. The first one is debt. The second one is owner investments. And the third one is from the business. Those are the 3 sources of cash, inflow of cash. Let's talk about debt for a little bit. The problem of leveraging too much on debt is that it creates a sense of constant urgency to generate cash to pay off debt. Using loans or credit can initially feel empowering, especially when it allows you to grow, invest in equipment, or cover payroll. Believe it or not, some businesses covering their payroll by borrowing money. Not a good sign of profitable business. It often comes with underlying emotional costs, anxiety and stress, loss of control, fear of failure. And the debt could be made up of credit cards, bank loans, vendors. Those vendors are suppliers that the business buys from and decides to pay them later. Nothing wrong with that as long as it's manageable. The second driver is owner's investments. Do you remember when you started your business how excited you were and you probably emptied your 401k, you emptied it out and decided you're going to use the money to start the business, or you used your personal savings or probably a gift? If you're a corporation, fortunately, corporations have the luxury of issuing or selling common stocks to raise funds to start or grow their businesses. Not many of us have that opportunity. Now, the third driver is from the business. To beat the survival rate, you must get good at making money. This is from the business. This is the money that the business itself creates. By doing what? By doing what you open doors for, serving your customers or your clients. It's all the cash that comes in, less all the cash that goes out. Because putting it frankly, to make money, you have to spend money. So wisely, of course, the money comes in from the sales, but you still have to keep the lights on. And you still have to keep the employees working to be able to generate more revenue. So whatever is left over is what we're looking for. So we want to bring in more than what goes out. And that is our leftover that we use to run the business and to grow it. Now, because the purpose of you having a business is to design a life, not just a livelihood. Otherwise, we might as well just get a job. And I don't think any one of us want to do that. So we want to generate cash as much as possible. And the cash is generated by the revenue, expenses, and profit. What is revenue? Can we define what revenue is? What we sell? Expenses, the costs of running the business, and the profit is what we keep. Profit is what you either get to keep for yourself as a business owner or put back into the business to invest or grow your business. And you want a lot of that. So your job is to generate enough revenue, as much as you can. You want to get this number as high as possible each month. Remember, revenue is what you sell, either products or services. You want this number to be as high as possible. Profit is what you either get to keep for yourself as a business owner, or put back into the business to invest or grow it. That's what you want. What about cash flow? More importantly, you want to get this number as high as possible each month. Cash is king. Cash is king. You cannot run a business, no one can run a business, sustain a business if there's no cash to utilize to run the business. So if you want to keep a business out of bankruptcy, you need consistent revenue, sustainable profit, and free cash flow. Those are the drivers of cash. Talking more about what drives revenue into the business, most business owners think when it comes to revenue drivers, well, if I want to increase my revenue, I just need to sell more. That's the solution. Just go out there, sell more. Hire salespeople. Get them to sell more of the services or the products the business or both of them if your business is hybrid. However, without looking at how your revenue is actually created, you're really not working smarter. You're working harder. And you want to work smarter, not harder. So why selling more isn't always the answer? I'm glad you asked. Here's what they're missing. We're missing 5 factors or elements of the revenue aspect. The first one is who's coming in. Leads. How many leads is the business generating every month, every week, every quarter? As frequently as the business owner wants to measure it. Out of those leads, how many of them are being converted to clients? How many say yes to the services or the products that the business sells? And out of those ones that have become clients, how many keep coming back? How many keep engaging with the business and purchasing? The retention rate. How many remain as clients? How often do they buy? Purchase frequency. How many times in the year, in the month, in the quarter, during the week, those clients or customers come around to purchase more? And how much do they spend? That's the average transaction value. Your accounting system can provide you with this number. How much do they spend? Out of those purchases they are making on a regular basis, how much are they spending? Now, at this point, what I want to do is jump into Excel. I want to show you how these drivers or these elements interact with one another when it comes to increasing your revenue. How one change, a minor change in one of the elements, can change the whole equation of generating more revenue and cash. Hold on tight. I'm coming back. Let's go to Excel. In this spreadsheet, I want to show you the elements that I was just discussing before. Revenue drivers, the leads, the retention rate, the purchase frequency rate, average purchase value. Notice that in this example or exercise, we have 500 leads. This is a business that generates 500 leads either per month, well, that's a little high for per month, per quarter, 1 year, depending on the size of the business. The important thing is how many of the leads that the business is bringing about either through the marketing efforts, right? Because the business is investing in marketing efforts to be able to make itself known in the market, make the products or services known in the market. Then the leads come, they fill out forms in the website, they call the business phone line, they interact with the customer, with the owner, they inquire about the services. The business owner gets to present to them, does a discovery call and explains the services. Well, how many of those are now converted into clients? In this example, we're using a 15% out of 500 clients. And let's say this is a very small business and it's a 1 year calculation. Annual calculation of 500 leads, 15% conversion rate. The result is 75 customers. If that business generates 75 customers or bringing 75 customers, and on top of that, adds to the prior customers that were already part of the business, now the business has 118 customers in the year. If they're purchasing at a frequency of 2.5 times to be conservative, and the average purchase value is $750, per transaction. This business is generating $220,313. That is the revenue. And again, this can be measured on a monthly, quarterly, yearly, every 6 months, however the business wants to do it, and as much as the target goal is for revenue. But this is an important calculation. This guides us how we can measure the revenue that we want to generate. Now let's change the numbers here. Let's say that 1,000 leads were generated. However, out of those 1,000 leads, only 10% became clients. Look how the numbers begin to change. Now, from all of these clients that the business has now, 143, we'll increase the purchasing rate. Let's say that they come around, each single client purchases at least 5 times in the year. That brings us to almost $500,000, or a little more than $500,000, if we keep the average purchase value the same. This is an illustration of how the revenue can be calculated or estimated or targeted if the business wants to grow it. If the business wants to increase the revenue, this provides us with details, with a detailed guidance to get to that point. What this spreadsheet does is to provide us with a concrete way of targeting the revenue the business wants to generate, rather than daydreaming about it or pretending that we just need to sell more of what we sell. Instead, you can set targets and you can calculate based on these numbers or elements, change the numbers around, play with the numbers, and figure out how much revenue you want to generate in the year, month, quarter, or every 6 months. Now that we have a better understanding of our revenue drivers and how to estimate them and set targets around the revenue, our actionable takeaway for this presentation is revenue is not random. It's the result of multiplying the right actions, just like I showed you, changing the elements around. One element can change the whole equation. By improving even one of them, you can unlock significant growth. This is how business owners move from being reactive to strategic and begin generating revenue by design, not by default. As a bonus, you can access this spreadsheet calculation for your own use. Next, let's talk about profit. Why profit alone isn't enough? How expenses affect cash flow. Why am I saying profit alone isn't enough and now I'm talking about expenses? Well, expenses impact the revenue. Remember that your expenses are cash flow drivers. Even though the cash is going out, it is a driver of cash. In what sense? Because these expenses, whether they are rent, utilities, wages, salaries, when these expenses are done strategically, they generate cash. Let's say, for instance, marketing. When marketing is done well, the right way, it generates leads and sales, increasing incoming cash. Poor marketing is wasted cash with no return. Therefore, the money has to be expensed strategically. And the main expenses are overhead, marketing, and payroll. Especially payroll are usually the largest ones. And overhead is everything else included in that equation. What questions a business owner needs to ask before spending money? Are you paying for tools or subscriptions you don't use? Does a particular expense directly contribute to revenue generation? Otherwise, why spend the money? Now, is this expense necessary? Does it have to happen right now? Is it urgent? Can the price be negotiated or purchased through an alternate vendor? It would really save a lot of headache and money that is many times wasted because it doesn't bring any return. It doesn't generate any revenue. What is our key takeaway? Cash flow isn't just about how much you sell. It's about how you spend. Overhead marketing and payroll are powerful levers. They directly impact how much cash stays in the business. Therefore, when managed intentionally, they help create stability, breathing room, and sustainable growth. Now that we have seen how cash flow is affected by more than just revenue, let's walk through the best practices that help spa owners, business owners in general, and especially in the spa business, take control of their cash, smooth out the stress, and grow with confidence. How much cash should you keep in the bank? A best practice in cash that needs to be kept in the bank is 1 to 2 months of regular operating expenses. What this means is that in the checking account, operating account, any business has an operating checking account. Let's start with that. The balance in that account should be or should cover at least 1 to 2 months of regular operating expenses. That is used for the bills, payroll, and day-to-day spending. On the saving side, the business should keep an emergency fund, 3 to 6 months of total business expenses. Why is that? Because it protects you during seasonal slumps. Think of your checking account like your day-to-day lifeline, but your savings account, that's your business oxygen mask. If the unexpected hits, you want enough cash to breathe without panicking. Some practices also is collect cash faster. Speed up the money coming in. Establish policies around payment terms so the customers or clients know exactly when they need to pay the invoices. Require deposits or prepayments for bookings, 50% in advance for major work. That allows the business to have cash on hand to run the operations and cover the expenses. Offering memberships or packages. Sending invoices immediately and follow up regularly. A very important policy that should be established and implemented in any business. I've seen business owners, small businesses that wait, procrastinate on sending invoices, or they just simply don't have any policies and procedures around it. And the bookkeeper, not knowing what the policies are, because there are none, then gets busy on other things and neglects the priority of sending invoices out so that the money can come in soon. Make it easy to pay. Now, putting it all together, there are 16 parts that drive revenue, profit, and cash flow. So far, we've talked about how to manage cash flow with strategies like cost control, saving for emergencies, and knowing your monthly numbers. But now it's time to zoom out, because cash flow doesn't exist in a vacuum. Cash flow is impacted by every single part of your business, from how you price your services to how your team performs to how often clients come back. All of it plays a role in your financial health, because cash flow doesn't stand alone. Every decision you make, from front desk to back office, affects cash flow. Let's look at the 16 parts of the business that either generate or drain cash. The 16 parts are: the left-hand side, revenue, leads, conversion rate, retention rate, purchase frequency rate, average transaction value. We saw those elements in detail before, and I showed you a calculation or computation on how to play with the numbers to set targets around the amount of revenue the business wants to generate. Profit, cost of goods sold, marketing, payroll, overhead, and other income or expense. On the right hand side, you can read for yourself the drivers, the 16 the parts on cash flow. Let me show you the full picture, the 16 drivers that work together to create a profitable, sustainable business. Either the business is a spa, marketing business, wellness business, any business. The 16 parts of your business are revenue, within the revenue, profit and cash flow. The 16 parts are made up of revenue, profit, and cash flow. Within the revenue, we already saw in detail the leads conversion rate, retention rate, purchase frequency rate, average transaction value, and I showed you how they interact with one another among each other in the spreadsheet that I made available for you to also download. I explained also the profit, the parts of the profit, and how they drive revenue, they drive cash, the cost of goods, marketing expenses, payroll, overhead, and then other income and unexpense. Cash flow, those are the elements that you can see for yourself here, parts that drive cash flow under the cash flow in the right hand side. If you want a list of each of these parts along with every single definition and examples, go to ibanessasoto.com/drivers. They will be there for you. If you want just one part, assuming all the other parts remain the same, if you change at least one of them, your revenue, your cash will improve. And we saw it in our example in the Excel spreadsheet. If you only want to improve one of them, change it around and you'll see an improvement in your cash. Looking at the 16 drivers, it's clear that running a financially healthy business involves more than just watching your bank account. Watching the bank balance is not enough. But don't let it overwhelm you. You don't have to fix everything at once. Instead, focus on progress over perfection. And we'll show you how to do that. From complexity to clarity, let's simplify this. With a roadmap you can actually follow. I don't want you to be overwhelmed. That's why I have developed a simple, powerful 5-step roadmap that any business, including spa owners, can follow to get clarity, confidence, and control over their numbers. Let's see this. The 5-step roadmap to profitability and cash flow are: first, business assessment, profit and cash flow target, create a scoreboard, monthly action plans, and long-term value building. In the step 1, business assessment, we analyze your business and financials to uncover exactly what's holding you back from generating more profit and stronger cash flow. This gives you a clear, objective picture of your current financial health. On the step 2, we defined clear profit and cash flow goals based on your unique vision. We then create a customized plan to improve financial performance. That way, you're operating with efficiency, consistency, and growing your business. In the step 3, we create a scoreboard. We give you a simple 1-page monthly scoreboard that shows what's working, what's not, and what needs attention. That way, you always know where your business stands financially. In the step 4, we go over your monthly action plans, and you receive the plan, which is the plan of action for you to follow. In step 5, then we set up long-term value building, because now we're not just meeting on a monthly basis, but on an annual basis. At the end of the year, we work on the strategies that you want to implement to increase the long-term value of your business. This allows you to build a company you can scale. You can sell it later on. It can run by itself and get it ready for selling and make money out of that. With that money, you can possibly retire. I understand what you're facing. I'm here to help you. You didn't get into business to become financial experts. Let's keep it honest. Numbers like cash flow, margin, and KPIs can feel overwhelming. That's why I'm here to help you. If you want to turn your spa business, your business, any business, into a money-making machine, let's start with a simple, no-pressure conversation. You can schedule a call at ibanessasoto.com/clarity. If it's a good fit, we are a good fit for each other, I will walk you through what I'll do for your business, how I will do it, and what it will cost. It's a free 20-minute right fit call on Zoom. That way we can get to know each other and explore the possibilities. Thank you, and it was a pleasure doing this presentation for you.